in January 2022 after a £1.7 million raise. So this is exciting. Great to meet you, Zach. So normally you're on the other side of the camera doing what I do. So this is a different position for you now.
Yes, I've had, I suppose, more than 20 years of experience in the financial journalism area, which I'm not sure it's probably a bit more than yours, but basically I was there at the start of the whole .com boom and bust. Many financial websites started up then, and that's when I became a financial journalist. The experience before that was in broking, so futures and options broking in the 90s, and then bringing in the rest of the board. We've got fund management experience and hedge fund experience, so we really do know the area, and probably more as much as anybody else does in the UK. The idea is to acquire businesses in our areas, in our area of experience, the areas that we've worked in, and basically those businesses are the picks and shovels. They're providing services to listed companies, to retail investors, social media businesses, trading platforms, everything that is in our little universe at the moment.
So all of the knowledge that you've accumulated over the past 20 years or so, you're going to be putting into practice.
Yes, I think there's a lot of examples of what you should do and maybe what you shouldn't do. I think we're very keen on revenue generating businesses. We're keen on improving the businesses that we acquire as well. So if it's a financial website, maybe add a trading platform to it. If it's a trading platform, maybe add a news website to it, that kind of thing. Social media is also very important now as well. So there are a lot of companies that provide social media services to listed companies. I think that's a growth area. Twitter and Telegram are sort of on fire at the moment. They've become additionally on fire since the pandemic. And I don't think that's going to change. We seem to be in a sort of rolling pandemic now. So I think we're very much digital and online, and the opportunity, I think, is there. The other thing I think to note is that 20 years ago, people didn't really know how to value websites and trading platforms, but I think now things are much more standard and established, and I think that's also a plus point in terms of what Lyft is going to be doing.
Yeah, and Zach, you mentioned the pandemic there. Of course, we've seen an acceleration of people wanting to get their message out there and using several platforms to do so. So that real need for knowledge. Also, we've seen an emergence of a lot of crypto companies, for example, getting out there.
Yes, I think that probably some of the liquidity that was in the small cap market, maybe a lot of people have noticed that, seems to have seeped away into the crypto area. People are punting on the latest coins. And there's another ecosystem of websites and trading platforms that's come through. I think there's a sort of a gold rush at the moment, but the skill, I think if you're a seasoned investor, as hopefully Lyft is to pick out the bargains and the ones that will have the most growth potential.
Yeah. And what would you say is the opportunity in the financial media and the technology space here? How big is this opportunity?
I think the opportunity is actually was shown by Aberdeen's takeover of Interactive Investor just a couple of weeks back. They bought Interactive Investor for £1.5 billion. So I suppose that's the target for this area. I started writing on Interactive Investor 20 years ago, so I know the story very, very well, and the founder as well. So that's the kind of pathway that you can get. That's the valuation you can get if you do everything right, which eventually over 20 years they have done.
Mm-hmm. And how does the relative undervaluation of UK tech as compared to US tech, how does that impact you as a company?
I think that's one of the opportunities. The opportunity is to buy a scalable UK business at a UK price, which may be, let's say, £10, and then try and sell it on in the US at £100. But that seems to be it's almost 10 times the valuation. Many of the tech companies I interview, we discuss, and you can see that if they were listed on the NASDAQ rather than on AIM, they'd probably have another zero on their market cap. So the opportunity is to buy cheap UK tech businesses which are scalable through Europe and through the US, and then hopefully then sell them on to the US players.
And going back to the listing, why January 2022 and why Aquis?
I think Aquis is a subject close to my heart. I think they're a disruptive player. They're there to challenge it's a sort of David and Goliath thing with the London Stock Exchange, and that's something that I'm inspired by. It's the same kind of feeling that was there 20 years ago when we had the financial websites versus the old newspapers. And if you look at it now, the financial websites are, rubbing shoulders, and in fact, everything has gone that way. So I think the Aquis market, because of the rule changes as well, it suits the smaller players, smaller companies. You need to be 50 million, 100 million now to get onto AIM, and the costs are much greater. So I think that is one factor. The other factor is that actually for tech businesses, you need much less capital to get going than you do with old economy businesses. And so there's not a problem with raising a relatively modest amount. And then hopefully it will capture the imagination of investors, and the paper valuation will then allow us to acquire more businesses.
Well, best of luck with everything. It'd be great to catch up with you in the new year and see how you get on with it all. Zach, thank you very much indeed for your time and introducing us to Lift Global Ventures here on Proactive.
Thank you.